Howdy. Who here knows about carbon credits or biochar carbon credits? Wow, okay, 80% of you guys. So 6 months ago, I did not know anything about carbon credits, and here I am presenting. But I know about environmental commodities, been covering it for over 3 years now, and I'll be presenting on the pricing shifts of biochar carbon credits, and specifically biochar, but also giving a glimpse on CDR, that is carbon dioxide removal, the tech segment, or engineer. My name is Santi, as the presenter said. I'm a price reporter at S&P Global Commodity Insights. We're an independent provider of information, hence on independent. We have no role in the market besides providing market information. We provide information on different commodities as well as energy markets, from established commodities like energy, natural gas, power, and emerging markets like energy transition and carbon. Now, in terms of transparency, why are price assessments necessary in the carbon markets, in the voluntary carbon markets? Buyers, sellers, a plethora of market participants use our information to inform their business decisions. Where am I going to sell biochar credits? Well, you need an informed provider of information, right? And we see that price discovery and price transparency is very important to bringing this market into a mature, fully functioning market. If a buyer and a seller does not have transparency or an agreement, or there's a disparity in pricing of information, it could lead to mistrust. And therefore, we believe that with price transparency, it could lead to liquidity, more investment in the market, and eventually lead, of course, to a fully functioning market. Now, in terms of biochar, we're far from that. I think the previous presenter mentioned how most of the project is financed, or the industry is financed, using long-term contracts. At least the majority of your credits are going to be financed to an offtake contract, and then the remaining might go into the spot market, what we would call the secondary market. Both of these stages are very important for a mature market. So on that, why are things being project finance? As you would know from this audience, it's CapEx heavy, and therefore you need to secure, at least on the project financing side, a seller for the credits or the physical biochar. And you also need, from the buyer's perspective, some certainty that you're going to deliver, and price certainty, of course, right? Now, to bring this price transparency, one of the things that we do is we collect information from the audience, not the audience, but market participants per se. Some of my sources could be here, some of my sources might not be here. But what we do is we grab this information, we collect it, we anonymize it, and we publish it in our platform, but in our media, content, etc., interviews, you name it. And the key here in our pricing herds is we try to standardize things as similar commodities. There might be some pushback for that, but we believe that a project isn't just $1 a metric ton of CO2 equivalent. That's not just what a carbon credit should go off of. It should be off of the methodology, the carbon standard, the co-benefits, if it has the sustainable development goals, because buyers do value that at a premium, or some even at a discount, who knows, right? But we also include the vintage, the delivery, the region. We have some there for the US, we have some for India, both artisanal, and there's some for our industrial biochar. Now, in terms of our price assessments, they really aren't ours. It's more of like reflecting what the market is at. In the voluntary carbon market, we publish assessments for avoidance markets, as well as removal assessments. And then you see at the bottom, Corsia, but that's a European, mostly European focused. Now, within the removal assessments, I'll focus on the US biochar and the India biochar. And again, this is something that I do every day, so I hope this is interesting. So looking at our US biochar assessment, which is the top line in blue or dark blue, and then the India price, the bottom yellow line, you'll see that we launched our India assessment in June of this year. And we were hearing starting in May that there was a big interest in industrial biochar in India. There's a lot of development and production coming online. And a lot of those credits were going to go, of course, to the Western markets, Europe and the US, but into the secondary market where they didn't have a home to go to, per se. So smaller deals were starting to be sold in the secondary market. Spot deals, usually 500 credits to 5,000. India, we do see smaller volumes compared to the US. And we launched that assessment in June, around $140 a metric ton CO2 equivalent in June. And since then, prices have gone a little bit lower to 130. The latest pricing that we've heard is 130 to 140. Long-term wise, nothing firm, but 120 is what we've heard for next year delivery. And I'll touch on why that is in a minute. Looking at the US, you'll see that when the India assessment launched, it was at parity. But since then, we've heard from market participants that there's a price premium for the US industrial biochar versus India. So it's ranged from $5 all the way to $15 a metric ton. And this is current year delivery, so delivery this year, both of these. Looking at the timeline of the US assessment, we've seen there's been a summer lull, less demand this summer, and prices have kind of gone down 1% from July and August, but 10% from last year, increased year on year. And that is because there has been more demand from last year. However, expectations is that next year there's going to be more supply in the market, and I'll touch on that in a minute. But looking at September, this is the price from, I think, Friday. It was at 148, and the reason it's at 148, we had seen bids from 140 all the way to 145, and offers for 150 to 160, and this is pure earth certified credits. On that, though, I will mention that we have seen some trades for isometric pre-certified around 160, 180. Hence, we have not reflected that in our assessment, given that they haven't been certified, okay? And then there have been other offers for pure earth certified credits from developers at 160 on the basis that they're higher quality, but it still remains to be seen if they're going to be traded. Now, looking at the CDR segment, these are all the credits that have been issued and retired. I won't go into the details of what that means, but in terms of retiring, it's when a company basically retires those credits, and those credits can no longer be traded again in the market. They've done their offset purpose basically. Now, in the tech segment, you'll see that in August, they've decreased year on year, around 93% from July, and then they fall in 84% on the year. That is retirements, that is in the blue line. And then that basically means that demand has not lived up to the expectations that the market expected for this quarter, per se. Now you have on the right-hand side issuances, and you will see that issuances are higher than last August, but lower than June, and then slightly above August of last year. There's some, or not last year, last month. There's some theories. We have heard market feedback that issuances were very low for pure earth certificates. There was delays in the market, so that could be at play. And then, however, looking to September all the way to the end of the year, we're hearing that there's going to be an increased supply of credits. This is notional, but I'll jump into the actual data where most likely we will see more credits these next 4 months. So this is specifically on biochar carbon credits, and this shows the net balance of credits or available credits that have not been retired. The first graph, 2024, you'll see issuances, first column, around 170,000, and then retirements about halfway, which leaves the remaining net balance. So that is the net balance of credits that have not been retired. It does not mean that they're available for sale. It simply means that they have not been retired. Now you look at 2025, same thing, issuances, retirements. Issuances are currently at half of what they were in 2024, which again kind of corroborates what we had heard, that issuances are low. This is for Pure Earth data, which is primarily 80-90% of the market if you don't count other registries from that have projects elsewhere like Latin America and Africa. So for 2025, the net balance is roughly 21%. So there's 21% of credits with vintage 2025 from September 3rd data that are available to be retired. So if you guys saw in the news that the supply for 2024, 2025 has not been retired, it's partly true. Again, 50% for vintage 24, 20% for vintage 21. But the majority of these two credits, issuances, are still or have been retired. That said, you'll see that there's a disparity in terms of net balance. There's more vintage 2024. That makes people question, like, why is it that there are more 2024 over 2025? Is it because of the issuances delay in 2025, leaving less credits for 2025, or there's more demand for that vintage because of a perceived higher quality? Again, these are Cork 100, not yet Cork 200, right? So there's questions on what will happen next year when these credits are Cork 200. What will happen to the credits 2024 and 2025 that have a permanence of 100 versus the newer ones will most likely have 200 for Puro, and then isometric, we'll see, 100 to 200 to 1,000, right? Now the last question is demand shifting towards newer vintages? Now focusing on the US, this is a graph of current year delivery, which we saw, but I've overlaid it with our next year delivery. So remember, credits for this year delivery are credits that are gonna be delivered from now to the end of the year, and then credits for next year reflected in the yellow line. So if you look back historically, there was a price premium of $5 for next year delivery, meaning it was more expensive. You could get a better price if you sold for a future delivery. And the reason was there was expectation that demand was going to be there. It was going to increase, right? We've been hearing that CDR is going to be the next thing, and you need to purchase your credits now. Microsoft is coming in. There's going to be a shortage, right? It's been a rhetoric there. And it has been true in a way where we did see that price premium, 5 to 10, but as more supply has been, or in other ways, there hasn't been the demand that has been anticipated. We're seeing credits for next year, because there's going to be more supply coming online, at parity per se to current year delivery, and I'll dive into that. But during time, we publish obviously content. I'm on the ground speaking with the market participants, and we started seeing that in April, that the global supply was tightening. Again, this is in the past, so if we forget from April all the way to September. In April, we started hearing and seeing from Pure Earth data that global credits were tightening. And the reason was that there was a delay in issuances. So we saw prices not skyrocket, but increase from 145 all the way to 155, which is not truly that significant, but it is over 10%, and it's something, or 5 to 10%. And then we started seeing that activity was falling in June. Again, summer months, June, July, August. Expectations have been that demand was going to be very low. And we've heard that in September, demand was going to increase, of course, this month. And then looking at the first time that next year delivery fell under current year delivery was in August. And the reason was that there was limited demand for next year delivery, and there's expectations there was going to be more demand coming online. And we see that with many projects coming online and offtakes being announced. So price for next year delivery fell to 148, and then it fell all the way to 145. And then ever since then, it's been at parity. So I hope that rationale was clear. Basically, just demand isn't keeping up with supply, and supply is expected to increase next year. And then the last story that we published was the last slide that I mentioned, which was that in August, retirement or demand had fallen. Alrighty, I'm at 5 minutes, and I'm sure all of you are familiar with this, but I want to just touch on what I'm seeing in the market in terms of biochar production. simple terms, biochar production, feedstock selection, your technology. That sets you apart from someone else, kinda. And then you have your financing, which we kind of went over. You have a business model, the scale, the CapEx, OpEx. You can secure if you have an offtake secured or not, right? But what I'm seeing is that a lot of the big developers that are selling credits into the market at a competitive price, they are mindful of these two key things. They know that the things that impact their carbon credit price is obviously their standard methodology, the volume, the vintage, the delivery, the co-benefits, and the alignment with buyers' criteria. You see that, not to nitpick on Microsoft, but Microsoft won't buy any type of credit. It has to meet their standards. So a lot of off-takers have that standard. But that key thing that big developers in this space look at is feedstock type. And not only where that biomass is coming from, but the availability of it. Are you going to get it year-round? Are you going to get it, is it accessible? And is it affordable? Because if for some reason it's not affordable, therefore you have to purchase that feedstock, you pay for it basically, and then you have to either sell the physical biochar bundled, unbundled. Let's say you sell it unbundled, but you have to sell that physical biochar to an end user. Or you can make up for the credit price at a higher price, and then like the Latin America developers selling or giving away the physical biochar. So it's a balance of the credit price and the physical biochar. Bundled, unbundled, what is the application? Because there's different willingness to pay across the different applications. And then if you're gonna sell it as an environmental differentiated product, like a consumer product per se. And we see these soil amendments in Walmart, et cetera. So with that, my last slide, upcoming market drivers. The first one is the evolution of permanence. There's a growth in, or a shift towards greater permanence, Cork 200, Cork 300, MRV data, and MRV, I was gonna say market reporting, but monitoring, reporting, and verification, and data. Credits for next year are gonna have more data compared to the ones that were there last year or 2 years ago. So there's a perception that those credits are gonna be more expensive. How does that impact the project's financing? Remains to be seen. Isometric will issue, has a lot of projects, will issue some credits next year. We'll see how that impacts the remaining credits. The ICVCM's launch of approved methodologies like CCP. How will that impact the credits that are issued with the CCP label? Again, Pure Earth has not been approved of that yet, even though my sources tell me that it will be approved, or it could be approved. Isometric is the only one. So that's an added layer of credibility and quality. How will it impact pricing? It remains to be seen. But neighboring markets like methane collection in the avoidance segment has gotten a premium for it. So we'll see how that impacts biochar. And the last two things is the impact on supply and growth in the market. We do see greater demand shifting towards newer vintages. How is that gonna be in 2026? We don't know. And how will it impact these newer methodologies that I basically echoed? And my last point, our analytics report basically still sees the same alignment that they did when they launched it, which was a structural undersupply of credits. They do expect that there was going to be more demand next year and the following year up to 2030, and there's going to be a undersupply of credits, sorry. And with that, I'll finish because I think I did go over time, but thank you very much. Here's my contact information.
Thank you very much. We will transition as to keep things on track. Thank you very much. Yeah, and please follow up if you do have questions after or outside. Thank you.